So hello everyone guys, and today we are going to talk about the most simplest strategy to trade every day. I'm gonna give you some advices about how to trade sideways movement every day. It's a very simple strategy and you need only two instruments to get a lot amount of profit. So the two instruments what we need is a Fibonacci grid, which are gonna help us to define premium and discount market, and we are gonna trade from the gaps of liquidity. And as a third support instrument we can use a Fuji or order blocks to get sure in our trading entry. So let's begin with the definition of premium and discount market. So it's defined by the Fibonacci grid, and to define it correctly, if you have a downtrend movement, you need to take a Fibonacci grid and place it from the highest point to the lowest to define your meanings. And of course you need to do the settings of Fibonacci grid like me. You can double click on it and set the settings like that. So and after that you can define premium and discount. The premium is above 50% of Fibonacci grid and discount are lower than it. And how it helps to trade us in this situation in the sideways movement. Premium market defines what it is the most expensive price what the market can provide you at that moment, and it is not optional to buy from these meanings, and smart money traders are gonna sell this on and the price are gonna drop down. And the discount markets is the best prices to buy. And remember the one rule: in the premium market we are going to sell, in the discount we are buying. So now I inverted our chart, and if we have an uptrend movement, we need to place the Fibonacci grid from the lowest point to the highest. And of course on the top we have premium market and at the bottom a discount. So let's begin with the trading of sideways movement. We need to wait for the formation one of it after an impulsive movement, for example like that. We have a uptrend movement, and of course we are going to take a Fibonacci grid, place it from the lowest point to the highest, which were here, and let's take time back. And now we have a premium market which are formed on the top and the discount market which are formed on the bottom. And now we have a sideways movement. We have a liquidity pool on the top, we mark it like that, and the liquidity pool in the bottom. And of course we have a good FG points like that. So what we need to do? To trade successfully here? We have an uptrend movement, and now we are looking for the sideways movement formatting, and we are going to wait for the liquidity grabs on the top or at the bottom. Especially here in this situation, in the uptrend movement, we are waiting for the liquidity grab from the highest point of it, and after that we can enter a good short deal for the capturing of this bottom liquidity. For example, let's look on the price movement. Here we have some good liquidity grab which are for break all the liquidity, and on the retest of this candle which are grab all the liquidity on the top, we can enter a good short deal with the risky stop loss like that and the grabbing of liquidity on the bottom. And let's wait. Here we can already fix all our position, and we already get 1:8 risk-reward ratio. Here we got what our deal are successful, and let's watch for an hour changes to get a good deal. Here inside this sideways movement we can define this FG from which we can enter a good deal with conservative stop loss and good liquidity grab and get a very safe good deal with 1.4 risk-reward ratio. And if we get this FG, the price are gonna feel it. And we have one more FG here which are touched by the price, and we can open a long position with a risk stop loss, the feeling of our FG, and get good risk-reward ratio. And now if it has two liquidity grabs, it's going to be the third. And here we have a third liquidity grab, and if we are waiting for it, you could open a good short deal with FG or wait for the retest of it. So just in one sideways movement on the chart we can open a wonderful 3 deals with a good risk-reward ratio which are gonna get you a huge amount of money. Here we used only 3 instruments: it's liquidity grabs, premium and discount market, and FG, from which we opened a good deal. You can open a deals from FG in 2 ways. From the feeling of 50% of it you can get a better risk-reward ratio, but it has a low chances to grab your deal. And the second way is from the beginning of FG. It's the more easiest way to the price to get your deal. But entering from the liquidity grabs like that are very risky. you need to wait for the retest of candles, for example like that, because here it has a FUG or order blocks in these meanings, and don't enter just from the liquidity grabs, wait for the retest of these meanings. So let's look on another example. It has an Ethereum chart. Let's place the Fibonacci grid from the lowest point to the highest of the beginning of our sideways movement. Let's place a premium and discount market to define our the best parts to enter the deal. And what we can see from the beginning, we don't have any good FUG to entry to this point, but we have a first liquidity grab from which you can open a good deal on the retest of this candle as I showed you before, and enter from this liquidity grab after you entered that deal and get a good risk reward ratio. And if you lose any of next deals in this sideways movement, you are not gonna be in losers, you are staying in profit. And of course, after you entered this deal, you can take the entry from the testing of this FUG zone and enter from this point or this point, and you are going to always be in profit. If you entered in this, you can close the deal on the capturing of this liquidity, and if you entered from this, you can place your take profit on the capturing of this liquidity. And remember one golden rule: place the stop loss where the crowd are gonna place where entry to the deals or take profit. It's the main smart money rule. The best ways to place your stop losses or take profits is the liquidity grabs like that, because afterwards the the price can be reversed or different situations can happen, and you can be liquidated in the situations like this. And the other way to place your take profits is on the FUG zone, because the price are gonna feel the FUG, and after that it's gonna reverse the price to our direction. It has a higher percent of changes of this scenario, and the FUG is a very good place to play. It's a very good instrument to place your take profits or 50% fixation of your deal. And now we are moved to the BTC 1 day time frame, and here we can see a good sideways movement. We're gonna place the Fibonacci grid from the highest point, from the lowest point to the highest, and define our premium and discount market zone. And what we can see here, the best entry point here from entering through the liquidity grabs. Now I'm showing you deals which you are missed because you don't watch the videos from my channel. The one change to enter a deal from grabbing this liquidity, and the another change is from grabbing liquidity here. So now let's define where the price are gonna move next. We have a liquidity grab here, and we get a 60% chance what the price are gonna grab liquidity here, grab the liquidity here, retest zones on these meanings, and after that is gonna fill the FUG and fill this FUG or FUG lower. To define the most important FUG, we need to place a Fibonacci grid from the beginning of this movement to the end and define our premium and discount market FUG, and we have a FUG on the OTA zone, and the price are gonna get the reverse from this FUG or this FUG. So let's place our entry zone like that and place the deal to the long with the grabbing of this liquidity and conservative stop loss like that, and we get a good risk reward ratio. Let's move it like that. So it's I think the scenario are gonna happen like that, but price are gonna break down the liquidity on some news, for example, like that. After that, I give you a 100% what it's gonna retest this FUG and like that. So we need to wait for the new all-time highs of the BTC. And in this video I showed the most simplest way to trade a sideways movement every day. It's work on every time frame, not only 1 day. You can trade like that on the 50 minutes time frame, but you need always match the trend which are now situated on the highest time frames. For example, here we have a local bearish movement, and you need to wait for the bearish movement on the 4-hour time frame or lower. You always need to match. For example, 1 hour time frame you can see the global uptrend movement, but local you has a downtrend, and you need to trade on the 50-minute time frame or 30-minute time frame. Look for the good positions to enter, look for the reverse of downtrend and open the deal to the uptrend if you has a good reverse formation, or trade by the local trend, because trend is your best friend. So thank you guys for watching. Follow my Telegram channel where I'm gonna drop all the materials for this lesson. Drop some likes and write comments about your experience with this trading strategy.